Welcome to TradeTheNBI.com. This is John's reports for the 17th. More of the same. Back above the green ABM. Now you see a reset here in the ABM, and that was because of the green cross. Now, under our new, well, not really new, but expanded view of the DOC here, we would notice that as long as that orange is in between the red and the cyan, we haven't really achieved a full turnaround from a buy standpoint. Still playing off that ABM green value that was 21.29 still becomes an effective approach at turnaround, long versus short. Still, shakeout falling. Red sort of flat lined here at this particular point. We do have some shorts coming back into it, moving back into the negative zone potentially. And if that orange keeps falling, yeah, we could be in the right spot. We also see steel rising, could get above that 7.5, putting together all of the criteria for a significant buy. This is interesting because it's one, probably by the end of this week, I think we would expect to start seeing, even though the election's a little later, polls and that finally getting into alignment with where they have to prove to their clients that they've been successful. So we may see some dramatic changes. If we don't, then I would think that the market's going to rally significantly on an expected HRC landslide win and go from there. So that's just where it is. I mean, regardless, we are expecting a rise into the end of the year, predominated by historical factors and the fact that Fed is going nowhere with rates. So that's just a red herring they've been throwing out for 7+ years now. No change with that. Daily C number 2 coming in with that crossover, and this one's a little bit closer to the orange moving below. So I think the Dow may actually be the springboard that we see on this. Now look at this from the euro standpoint. It's continuing to plunge. The pound is continuing to fade. Just getting down towards the bottom end of the range. We expect it to come all the way down to exactly this 109. We talked about it a little while back when we first started getting the DOC, and we were talking about not only the return to this, now you can actually take it back to right over here, and that would be your 100%, which shows you how useless that can be, in the sense that clearly we had some flat line, we had some positive moves with the DOC sign underneath holding it, subtle DOC spreads that just led to it. Nothing that was really dramatically breaking until we ended up with the orange staying in that range below the cyan and above the red, and that caused the cataclysm that we're seeing now. Nothing over the top, I don't think. We're still right within the range. I'm going to extend those bars again, and we'll be right between that parallel. Now, at that particular point, it's going to be interesting to see where we're at, because when we get to the bottom end of this range, this is going to get into a critical juncture. We haven't been this low in quite some time. TLT, likewise, I've said all along, even with no prospect of rate increase, this just can't sustain where that's at. It's just a ridiculous number, which forces everyone to reconsider coming back into the market. And there's just no other alternative for that. It's a little wide for that chart. There we go. That gets you right back on the edge. USO. Yeah, it's not really worth much, but holding up decently. I mean, it's just sort of in a stasis point here right now within the DOC spread. Really hasn't flipped in a significant way. And GLD, nothing as well. Look at that shakeout straight down. I had a reboot of everything, so I have to go back and redo some of my charts the way they were before. I mean, no big deal. It is what it is. In fact, I didn't even have the MBI on some of those, so I'll just take that off there. It makes it a little easier. I try to keep it down to a minimum of these 3 showing. This is why I've tried to incorporate so much of the information in the shakeout as well as DOC extreme, all in the color of the paint bars, so that less view of that actually has to take place in order to understand quantitatively what we're expecting from the market. And I think that's becoming more and more effective as we see the shorts took place at just the right time. We needed the conversion long based off of the dip below the red line right back over here of the cyan, because that's always the long at that particular point. Though it was interesting to see that immediate crossover, which usually suggests a bit of a retrace right there. But other than that, all in all, I think the market is fairly stable, despite what you might think. Case standpoint, we can see that the hyper move of orange on the case chart signaled a short there, and we went into a magenta read, which is the number 2 configuration, and there's the regular 5K, and more than one of those at this particular point. Dip below the red line, I think that's early problem for futures at this particular spot. We have reset to some degree. Don't have the orange line on this one. So, for anyone who's forgotten how to do that, go to the orange, go to the, let me bring that down here so you can see it clearly. Go to the inputs, and just backspace, type in a 1, but then you need to go to color, and that's an important one. So it's the X812, and I just click the custom color of orange just because I like it. You can pick whatever color you want, but I just thought the orange stood out better. When you push OK, and it will automatically reconfigure it. And actually for me, I even do one more thing for most of these charts that you see when I'm doing it under style. I add to the thickness of the line to the second category. It just makes them stand out. So when I print my pictures, is how you can see them so much clearer than the single lines. I can understand though if you keep the single thicknesses if you're using just your own screen in that, but I think it's helpful in this particular case. That is the long and the short of it. Again, like I said, we're just going to wait for the political impact of things to start taking effect, and I think that at this particular point, money kind of froze here for a little bit, which is an interesting development because the built-in nexus of things is an HRC win. Any change in that model is going to throw things off, and we've seen a little bit of hesitation, which is exactly the opposite of what you would expect given what you read in the headlines, but the market is always ahead of the headlines, so it's worth noting. Just keep that one in mind. They have access to much more data and or real polling to indicate whether there's been an impact from any of the smear attempts or news related items, and they're going to see it first. So we're going to get that reaction early, which is why we've been following exactly what the market does and not what the headlines are, because they are irrelevant to market action unless there's some kind of major global event that is unforeseen. As always, look for me on the Skype chat. Trade well. We'll talk to you later.